Hello, everyone. Hope you're all doing well. Welcome to another edition of Coffee and Candlesticks. This is where we use HighBlock to showcase market insights and analysis for the week ahead. Before we get started, I'd like to say that this is not financial advice. Everything I say and show in the video is for educational purposes only. We're starting off today by looking at HighBlock's probability histogram tool. These are histograms analyzing historical data of indicators such as global longs, top trader long distribution, open interest, and funding rate. And we're looking at this with a 1 month look back. What we noticed is that during the open of this week, there was extreme behavior from retails and whales. Whales, which are represented by the top trader positions over here, was extremely low. You can see by the dotted line, which is all the way to the left of the graph, and retail, which is represented by the global longs distribution right over here, which is extremely high, which we can see from the dotted line right over here. If we look at the numbers more closely, we can see that 99.9% of the time over the last month, the top trader long percentage was greater than this value. And for global longs, 99.9% of the time, the value was less than this current value. Moving on to the main charts, we can take a look at the cumulative longs and shorts indicator, as well as the delta. Over the last few days, we've seen that the cumulative long and shorts delta has increased, which you can see right over here. And this is due to the fact that the net longs have increased and the net shorts have decreased. To this chart, we can add market order average size, which is under indicators, order flow, and open interest, right over here. This tells us the average size of all the aggressive orders, or the market sells and market buys, for each candlestick. And to this, we can also add the limit order average size, which is the average size of all the executed limit orders for both the bids and the asks. For each of these, we can change it to delta, right over here. So during this ranging period from March 12th to March 13th, right here, we see larger aggressive market sells orders coupled with larger passive limit buy orders. So over here, we can see in this range, we have larger sell orders for market orders. And in the same range, we have larger bids than asks. This could be sign of accumulation. If we zoom out and take a look at OI delta, we have created support and resistance zones based on where large number of contracts opened across all major exchanges. These zones are at 40,200 to 40,800, 39,400 to 39,650, and around 38,750. Furthermore, we can take a look at whale activity during this range by analyzing top trader leverage. We can see that from this point here on March 9th down to the range we're in now, price has decreased. In that same time frame, short leverage has increased and long leverage had decreased. However, today, from the daily open, we can see a sharp increase in long leverage. Finally, if we take a look at the liquidation levels, we can see a large concentration of short liquidation levels between 40,000 and 41,000 right here, as well as a concentration of long liquidation levels between 37,000 and 38,000 right over here. Even if we move to the open interest profile, we see there's a confluence with the liquidation zones and the profile gaps, which exist in the same ranges. We can see a gap here between 40 and 41,000, and down below between 37 and 38,000. So that was it for this week's edition of Coffee and Candlesticks. I hope that this was helpful. If you have any feedback, drop us a comment below, and we'll see you in the next video. Cheers.